Okay guys, so what drives the market? What drives it up and what drives it down? Now, essentially it is exactly the same thing. It's the human emotion of fear that drives markets up and down. Now, I know they say it's fear and greed, but look, that's essentially true, I guess. But what is greed really? Greed is just fear. It could be the fear of missing out, FOMO, as an example of that. And I'm talking about this because this is the stuff that I experience, when I'm trading, and stuff that I'm trying to work on myself. But just as an example, just imagine you're sitting down on a Saturday morning and you're looking at some shares. So you're going through, reading a few company reports, that sort of stuff, and you come across a share that just looks really good, and you research it and you research it some more, and everything about this little business that you've never heard of before looks so good, and you become quite excited about it. So this is a Saturday morning, and you look at the price and it's on the market. Let's just say it's on the market. The last sale on the Friday was $1, and you think, wow, that is awesome value. This company could be anything. You're excited about it. So you just put your buy in straight away, so that when the market opens on Monday morning, you'll be able to buy it. So you put your buy in at $1. Let's just say the bid is 99 and the ask is $1. So you put your buy in, your bid in at $1, so that first thing Monday morning you can buy some. Okay, so first thing Monday morning the market opens, and your little share that you're really excited about opens up at $1.02. So people have actually jumped you, and your bid's still sitting there at $1. But now the bid's $1.02 and the ask is $1.03. So what do? Now, this is where FOMO, the fear of missing out, can kick in, and you can start chasing. Now, as traders, that is a real trap when you start chasing a share up. So you might put your bid in now at $1.02. So you meet the bid, but the ask is $1.03. And then the next time you look, the share's up to $1.05, and your bid's still sitting there at $1.02. Now what do? Now you're getting really desperate, thinking, oh my God, I'm going to miss out on this great share. I've just got to buy it. And you do it. You just go and buy the ask at $1.05. You just pay the $1.05. You just want to get it. You're desperate to get it. You can see it going up, and you're so scared of missing out. And then, of course, what happens? The share price starts going back down, and before you know it, it's back down to $1, and maybe it goes through $1. Now it's at 98 cents. You think, oh no, I could have got it for $1. So this is how the market can really play on your emotions. So your fear of missing out has now turned into a fear of being in this share. So it is really fear that drives markets up and down. It's either a fear of missing out, or it's a fear of accumulated losses. It's FOMO and FOL, I call it. So if you understand, if you can understand that fear is what is driving it, and the emotion you're feeling in the market is just sort of exaggerated over hundreds of thousands, millions of people. If you can understand that and understand that concept, then you can work on taking the fear out of your trading and becoming a more rational, perhaps robotic, process-driven trader. And if you can do that, you will notice a marked difference in your success rate, as well as in your enjoyment of this trading caper. So there's probably lots of ways that you can overcome fear, but I think I'll just run through a few as they come to mind of things that I think are important. Number one really is having a complete detachment from your profit and loss. Now, that is easier said than done. It's very easy to look at what's going on in the market and do these mental calculations of how much you're up or how much you're down minute by minute. I suggest you don't do that. It just gets you into a place where you're trying to be right every minute of every day, and that's just impossible. It's never going to happen. So it'll drive you crazy if you're trying to do that. So having detachment from your P&L and having the right mindset when it comes to your own money. A good way to do that is just have a really structured approach. Like I talk about in previous videos, having really defined times to sell. So you make a certain percentage and you get out, and you know that before you put the trade on, so you don't have to think about it. Okay, once I get to this point, I sell. If it meets these certain targets or I'm in it too long, I just sell. Then you don't have to think about the trade once it's on. It's fairly automatic once you get it on. Another way is to stay detached from your P&L is don't bet the farm on every trade. If you have $20,000 to trade with, and you put $20,000 into this trade because you're so sure it's going to work, you will become obsessive, and you won't be able to keep your eyes off the market if everything you've got, if you've bet the whole farm on one trade. So you definitely, if you want to have a detachment from your P&L, don't go too hard. Really keep some in reserve. Make sure your trades are at a level where you can put them on and look away. Another way to detach from your P&L is to realize once the trade's on, the money's gone. Forget about it. It's no longer your money. You no longer have control over it. It's in the market. The market will do what the market does, and it's just letting go, just letting it go. That's if you can put a trade on and not look at the market for the rest of the day, realizing that the money's in there and it's gone. It's no longer yours. If you look at it that way, you'll find you'll be much more relaxed with your trading and far less fearful. So yeah, if you can understand sort of getting this detachment from your P&L, it will take away a lot of the fear, and it will help you to make more rational decisions. Another way to get rid of fear, probably the second way, is make sure you've got lots and lots of good ideas going on. If you've only got one good idea that you want to buy, and you go to buy it and the price has gone up and you don't know what you're going to do, you've got this fear of missing out, so you just keep chasing the price till you finally get in. I mean, if that was the only good idea that you have, of course you're going to do that. But if you've got 50 good ideas, 50 companies that you think are pretty much a good buy now, if you miss one, well, move to the next best one. If you miss that one, you can move to the next best one. And on the end of that, you've always got new good ideas coming through. So, yeah, I encourage people to spend a few hours every weekend just having a look at the market. There may be a share that you've looked at 2 months ago and disregarded. It looked a bit expensive, but the situation may have changed, so look at it again. Maybe the price has come down. Maybe fundamentally things have changed about the company to make it more valuable. So you can put that back on the list, and that can become a trading idea again. So, like always, having a good list and turning over a list, so you've always got some quality ideas, and you're not going to get to all of them. There's going to be quality ideas on your list that you never get to. but just having them there will help you make better decisions. Rather than chase a share up, you can let it go. Now we'll let that one go. We'll go to the next one. So yeah, just always keep working on that side of things. Yeah, always. Just keep having plenty of good ideas. And maybe the most important thing about trading is just keep it fun. Just make this a fun thing to do. I think sometimes we put too much pressure on ourselves and think that this trading thing is going to make us rich. This is the thing that will make us rich. And I encourage you not to look at it like that. Just look at it as a fun thing to do. And a lot of the things that I get from trading are the stories. The stories that you can talk about other traders with. That share, I nearly bought it. I nearly bought this share. I had my buy in at $8.55. The price went to $8.56 and took off, and it went up 12%. These are fun stories to talk about. And you can talk about the wins as well. They're fun to talk about. And you can talk about the big losses, and you can talk about the ones that got away. And just look at it as something fun to do, rather than this your one chance of being rich, because you don't want to put that pressure on yourself. And that's why having this little community that I'm trying to build here on this channel, it's people like-minded. So I want people like me that love the stock market, and we can talk about it, and we can share stories, and we can have a bit of fun with this whole thing. That is almost more valuable than the money that you make out of this. It's the enjoyment that you get. Okay, I think I've rambled long enough. So what I want you to get out of this video is just understand what drives the market, and understand it is fear that drives the market. Fear of missing out drives it up, and the fear of accumulated losses drives it down. FOMO and FOL. And when you're in the market and you're maybe wanting to buy something, just really understand where you're at. Understand the emotions that you're feeling, and see if it's the emotion. Try and understand if it's the emotion that's driving your thinking. Because if it is, you won't make good decisions. But if you can sort of somehow just relax, put that emotion aside, and try and make rational decisions. The rational part of you thought this share was okay, the dollar, you were happy to pay $1. Now the emotional part is paying $1.05, $1.10. Is that the right thing to do? So you've got to try and take a step back and sort of look from above at what you're doing, and make sure you're doing the right thing. So this is the psychological side, and it's probably the most important part of trading. Like, you've got the fundamental analysis and the really practical side of trading, but then you've got this emotional, psychological side that we're all trying to work on and master. And if you can sort of understand the emotions that drive your decisions, then you can work on controlling them to perhaps make better decisions.